I'm coming to you from the 2015 Bank Audit and Risk Committee Conference here in Chicago. You know, this is the 9th year that we've held this event. When we started it, we only called it the Bank Audit Committee Conference because we didn't talk about risk very much back in those days. Well, 2 or 3 years ago, we realized that risk was so dominating the agenda that we actually had to change the name of the conference. I thought I would share with you 3 things that I've seen develop over the 9 years that we've been coming here to Chicago for this event. The first has been the widespread adoption of enterprise risk management as a technique that a lot of banks use now to manage their exposures. It's a holistic approach that focuses on much more than just credit and interest rate risk. The second change is the number of banks that have established separate board-level risk committees or have hired chief risk officers. You know, the Dodd-Frank Act only requires banks above $10 billion in assets to have a risk committee and $50 billion in assets to have a chief risk officer. Well, we found that the adoption rate have dropped way below those regulatory floors. Our most recent risk practices survey, 47% of the respondents had a separate risk committee and 88% of the respondents had a chief risk officer. And the final change that I've seen is just how cyber risk has become the exposure that all banks are worried about the most, more than any other today. It's a huge problem. This industry really hasn't figured it out. It'll be on the agenda this afternoon. It'll be on the agenda tomorrow. This is something we'll probably be talking about for the next 10 years.